Good morning, everyone. It is April 28th. For those of you who need the reorientation to the calendar, it's always helpful. I'm Joanne Koontz. I'm here today with my partner and lovely sidekick, Marina Parkin. We wanted to share the good news and kind of touch base with everybody and bring the update with respect to PPP and EIDL, which actually have funding again. So we wanted to kind of revisit not only the broad generalities of PPP and EIDL, but go deep into what the new rules look like so that you know exactly what to expect. So I'm going to share my screen with the refunding of into the differences between the Schedule C and the S-Corporation applications, depending on how your particular business is organized. So in terms of PPP, as everybody knows, the PPP program is the one that is refundable. So this is the one that everybody has been most interested in, provided that you have had adequate income to be eligible to get a meaningful amount of money underneath the program. Congress voted last week to approve the program. The president signed it into law, and funds became available yesterday at 10:30 a.m. PPP was funded with an additional $310 billion. The EIDL program was given an additional $60 billion, $10 billion of which is allocated specifically for that $10,000 max emergency grant that we've been chatting about. So we've got a lot to get to with respect to the PPP program, and I wanted to kind of give you the overview. As we know, this is meant to be covering 2.5 months of your average payroll cost. A lot of discussion has come about from the inception of this program in late March through the implementation of this program through early April to say, what does payroll mean for businesses that were eligible for PPP but don't operate in the way that PPP rules were written with respect to payroll reports in 940s and 941s and W3s and that alphabet soup of form numbers. If you are an independent contractor, sole proprietor, Schedule C filer or S-Corp filer, owner of a business. These things are all shaking out much differently than if you listen to the webinars from very early on before we had any guidance from the SBA. There has been a clear line in the sand that the SBA has drawn, or I guess that Congress has drawn for SBA to carry out, that does disadvantage those businesses that do not have employees on the payroll. They're not saying with this additional guidance that they won't help you, but there's been a clear incentive to put the money into the hands of the businesses that have employees on staff. Now, that's not hugely surprising because, again, the purpose of this is to protect payroll. Now, the argument is for the small business owner, for the independent contractor, sole proprietor, it's protecting your payroll. So, you know, that definitely is not lost in this translation, but nonetheless, there are some distinctions, many of which were not advantageous for our Schedule C filers. Now, when it comes to what the differences are, as we've said in the last several webinars, if you file on Schedule C on your tax return for your business income, this applies to many of our independent contractors and self-employed folks, whether they're in real estate, consulting, sales, etc. You're required to use as your payroll, your average monthly payroll figure for purposes of determining your maximum loan amount under PPP. You're required to use line 31 of your 2019 Schedule C. Lots of questions have come up about this. People say, well, I haven't done 2019, so can I use my 2018 figures? My 2018 figures were stronger. I haven't seen anything where you can use 2018. They're trying to replace the income you just had right before the virus affected the economy. So 2018 is just too far away. I haven't seen any indication where that would be accepted. What they have given us in terms of guidance is clear to say, if you have not yet prepared your 2019 Schedule C, what you can do is provide a draft of that Schedule C, even if your entire tax return isn't ready to be filed. You can provide that draft Schedule C and then reconcile later after the PPP loan is issued when you go to apply for debt forgiveness. A big disadvantage here for the small self-employed person is the Schedule C really is the heart of the tax return. So it's easy for the rules to say, oh, just do that one piece and you don't have to do the whole return. That basically is the whole return for those folks. So this is a hardship for a lot of folks who don't maintain a sophisticated or ongoing accounting system, don't have QuickBooks prepared on a regular basis. If you are on that shoebox method of accounting, it's times like these where that's going to hurt more than usual. So be mindful of that, in order to submit that application, one of the documents you're required to upload is a draft version of the 2019 Schedule C at a minimum. If you have filed or you have a final version of the Schedule C, absolutely use that, but you are required at a minimum to have a draft of the 2019 Schedule C. Anything you need to put in there, Marina?
Yeah, a couple of things that I wanted to note there. Just based on, my conversation with our clients since last week when we chatted, there's still a lot of confusion between what is an S-Corp versus what is a Schedule C, particularly for folks who have moved from from reporting their tax return items on Schedule C to an S-Corporation. So I wanted to take a minute here and clarify a little bit. When you guys are looking at the application, I got a lot of emails even yesterday or Friday when this was opening back up to say, okay, we're going to apply. And people are looking at the application, then they're seeing, please provide your S-Corporation tax return. And then it says, please provide your Schedule C. If you are an S-Corporation, you're not going to have Schedule C. There's only going to be one instance where you may have a Schedule C if you're an S-Corp. And that is for those S-Corp folks that have not put themselves on payroll yet. So if you are an S-Corporation, your basis for this PPP application is going to be the salaries that you pay. Mm-hmm. If you are the only owner and you are the only owner employee, you should be on payroll with a real W-2. With whether it's your bookkeeper or payroll company, or you do the payroll yourself, you're issuing yourself a W-2. There's a lot of folks who have moved over to be an S-Corp that have not yet set up payroll in 2019. We have those clients, they're out there quite a bit. So the question for those folks becomes, again, what is my payroll? And do I need to prepare a Schedule C? What we have been doing with our clients is, if you have not yet set up official payroll, we still need to give you what's called reasonable compensation from your S-Corp. We do that at least in the format of what we call a management fee. So essentially the company pays you, instead of in the format of W-2, it pays you a management fee for managing the company. That amount is typically the same amount as the payroll amount, so it's reasonable. Depends on what reasonable is in every case. In the case of our, for example, realtor clients or any consulting clients, any type of a service, we usually look at about 1/3 of gross revenue to be a reasonable compensation. What we have done for those folks that don't have a W-2 is we have shown that management fee. That management fee then comes on your personal tax return on Schedule C. So if you are an S-Corp owner, but you do not have a W-2 to show as basis for your PPP loan, we will give you Schedule C with that management fee figure on it. So your Schedule C is not going to show your gross revenue and expenses because, again, that is on your S-Corporation tax return. What your Schedule C will show is the management fee that the S-Corporation paid you, the owner, in lieu of taking the W-2. We encourage everybody to set up proper payroll. We've had a couple of folks that have been on this management fee structure because their income has been up and down over the years. We have done a major outreach last year to really put folks on notice to say that IRS does not like the management fee structure. They really do want you as the S-Corp owner employee to really take proper W-2. Whether you decide to do it at the end of the year, whatever that amount is, it doesn't have to be evenly over quarter. And this is the time, we come to time like this, where having that proper structure really does pay off because, again, and as an S-Corp owner, when you're required to provide wages, you're not required to provide a copy of your tax return, a copy of your net income calculation, any of the bookkeeping backup to it. All you have to provide is your payroll. your W-2 and the year-own payroll reports, the 940 and the 941s for the quarters. That is all you have to provide. So it does, again, penalize you if you don't have that proper structure in place in just how fast you can submit. But, you know, this, again, this teaches you that when the time is good, let's clean everything up, let's get you back up to the proper structure. But for the time being, for those that are S-Corp owners that do not have proper payroll set up via W-2, we will give you a Schedule C with that management fee figure on it. So I have prepared about 10 of those yesterday morning as people were applying. And so I'm happy to do it for those folks that are my clients if your tax return has not been prepared yet, or it's in progress, or you haven't submitted stuff to me yet. So we can talk about it on individual basis, but that essentially is what I wanted to clarify so that you're not spending the time to put together things that are not needed. So if you're in doubt, just shoot me an email and I will clarify this for you. But there's a little bit of that confusion still, so I wanted to make sure to outline what's needed.
Let me jump on what you've said, Marina. Not only does having the proper structure and having the payroll set up equate to you getting through with less documentation and increasing the speed, but speed in which you can get to the SBA is directly tied with success in obtaining the funds. So if you don't have your Schedule C yet, unequivocally, absolutely do clear the deck today and do that. We have talked to several SBA bankers. The first round of SBA funding for PPP was $349 billion. It's now been given $310 additional billion dollars towards the fund. The first round of funding lasted 2 weeks. The bankers that I've spoken to have indicated to me that they expect this money will last 1 week. So it's going to be imperative that you get this application in as soon as possible in order to not have the funds exhausted. A couple of questions that have come up for me since we talked to you last Thursday. Lots of people are saying, hey, I'm in line, but should I get in line elsewhere? The SBA has actually come out now and directly encouraged you to be in line in more than one bank. They have, in the new extension of the funds, push for a percentage of funds to go to small and community banks. So if you're in line at Wells Fargo, if you're brand new in line at Chase or Bank of America, you may want to consider looking at a smaller community bank to submit an application as well. You cannot take funds from more than one bank, but they're now telling us, you know, to encourage folks to apply at more than one institution. We've had a lot of positive feedback about folks applying at some unconventional spots, like PayPal, for example. I think I shared this with you guys last Tuesday, that I had some feedback from some clients and from some attendees to the webinars who were kind enough to submit their experiences to us via email to suggest that they had applied fairly quickly and fairly painlessly through the PayPal system. The one complaint that I'm still getting is people don't really get an update. There are a couple of big banks. Bank of America, for example, is using a portal called Intralinks. Inside the Intralinks portals, people seem to be getting updates. Chase Bank has been emailing updates with a 4-stage process progress bar that they'll tell you where you're at in the process. But a lot of banks have not been able to communicate so quickly about the status of folks. In addition, when it comes to the EIDL program, the SBA I haven't really seen provide any kind of status update as well. So folks have submitted an application for EIDL, gotten the bounce back email that says the $10,000 emergency grant is now tied to an arbitrary head count of employees of $1,000 per employee. So they got that email, shortly later got the emergency grant funds based on their head count, but I still haven't had an experience personally with a client who's received the EIDL loan funds. Have you had anybody, Marina, that you've talked to?
No, the only people that have received anything have been those advances based on head counts. And the other thing that I do want to note here is supposedly if you have applied in both places and you have applied for the same use of funds, that EIDL loan will be rolled into the PPP loan when you actually get it. I haven't seen any of my clients get any notification about, yes, these loans are going to be merged or combined, or we're refinancing EIDL into PPP. I haven't. I have one client who has applied for both and did receive the both sets of funds, so they got that $10,000 EIDL, and then they also just recently received. So I am watching. I'm asking them to give me some feedback on their correspondence, and to see when they can, if they hear anything from the bank, to see how those two loans will work together. So we know what the rule is, we just don't know how technically it's going to work.
And that part is frustrating, folks. The other thing we haven't gotten a ton more guidance on, we were really expecting with the last round of funding extension to get a little bit more guidance on the debt forgiveness. But what we did learn was a little bit about the self-employed folks having a limitation. They have the same $20,000, $20,800 loan limit that we've seen from the $100,000 maximum in terms of the payroll. But Marina, can you tell us about the limitation with the debt forgiveness piece on specifically the self-employed folks?
Absolutely. So as a self-employed individual, again, you're on Schedule C, you're maxed out at 100,000 in the compensation amount. So let's say your Schedule C net income is going to be 120, you're maxed at 100. So your loan amount technically is calculated as 100,000 divided by 12 to get an average monthly times 2.5. And that gets you to about 20,000 of potential loan you can get. However, the forgiveness period is 8 weeks. So when they take that same 100,000 and they divide that by 52 times 8, that only comes to about 15,000. So the idea is that in the 8 weeks after you receive the loan, the owner compensation part, max to 100,000, is only going to be 15,000, which means that the 5,000 of the loan that you receive is not going to be forgiven, unless you have other uses of funds, which are business rent, utilities, or interest on a business mortgage. So if you own a business property that is mortgaged, interest on that. So if you don't come up in those items to about 5,000, then that remainder is going to have to be paid back. Again, no specific guidance on how that's going to work. And we are looking into the forgiveness, but I just wanted to warn the folks that are specifically self-employed and Schedule C filers, because the issue is, if you are an S-Corp and you do rent space and you do have real business utilities, it's not going to be difficult to use that other 25% of the funds on those other permissible uses and get the whole entire loan forgiven. But most of the time, as a self-employed individual, you may not have a separate space that you're paying rent on or utilities. And it looks to me like using your home office, although deductible for tax, is not going to be considered paying actual rent under the PPP forgiveness rules. So you may still deduct your home office. Let's say you're renting a house and you're allocating part of that rent to home office expense. That is 100% deductible, no doubt about that. However, for the purposes of the PPP forgiveness, when you have to show that other than the 15,000 owner compensation, what did you spend the other 5,000 on? It seems to be, again, without any further guidance at this point, that the home office part is not going to be considered that allowed use of funds that can be forgiven. So at this point, I'm just warning folks that for those that receive the 20,000 loan that are maxed at 100,000 and your loan is maxed at 20,000, be prepared that about 5 of that is not going to be forgiven. 15 is going to be the owner compensation piece that will be, the other 5 may not be. And we'll bring you more as we find out.
That seems like another place where we've got a disadvantage simply by the structure of the business. There's nothing to say that you might not have a separate outbuilding on your property specifically to run your home office, but they're not allowing any flexibility there for those self-employed folks. One point of clarification I want to draw, Marina, Chris Sensenig is joining us again, thank goodness for her. But she's got a question with respect to the 75% rule of payroll. So I think we need to do some work here. What she's asking is that 75% total as reported in the year prior for all employees? Or is that 75% for each employee, such that if you had 10 employees last year, do you need to have 10 employees this year making the same amount of money? Even if maybe 2 employees quit and now you have to pay the remaining 8 people overtime.
From what I understand, the employment piece of it has 2 components. One is the head count and the other is the amount. So your head count cannot be lower than the head count that you applied with. If you had to let people go before you got the funds, you can either bring these people back or hire new people. But the idea is that during the testing period, and you were given up to June 30th to actually bring certain people back. So during that testing period, but ending, I guess not later than June 30th, your head count is supposed to be the same as the head count that you applied with. So that's number one thing. The number two, and actually there's 3 pieces. The second piece is that each of those people, each of those employees cannot get their salary cut by more than 25%. So if you are bringing other people, replacement people, and you're paying the replacement individuals a different salary or a new salary, overall that salary cannot be more than, I guess, cut more than 25% than the salary of the person they're replacing. If you're bringing the same person, again, you can bring them at least 75% of what their salary was before. That is the second rule on the compensation. And then the third rule, which I guess if you have those 2, the third should work, but technically, overall, when you look at what your total amount of loan is spent on, at least 75% of that loan has to be spent on payroll, which that math should work out if you did not cut people, if you replaced people, and you didn't cut their salaries by more than 25%, your overall math on the loan amount, 75% to be on payroll should work. But that's not to say the devil is in the details. So these rules are written with a great intention that this is really given to you for payroll. But I think when you start to throw numbers around, that may be a little bit funky. The other thing that I'm having a hard time wrapping my head around a little bit is the replacement period of those employees. In the rules, it says that you have up to June 30th to bring people back. Does that mean that your testing period for when you show that payroll for those new people extends? Again, I'm not sure. We'll have to bring that back. So
my understanding was, go ahead, sorry.
No, that's it.
My understanding was that the testing period began the day your loan funded. So if the funds arrive in your bank account tomorrow, tomorrow begins your 8-week testing period, and that's going to fall short of June 30th. So you have until June 30th to bring the people back, but that seems to leave a gap where then your funds, your PPP funds, were not necessarily used to pay the new person. And maybe you did have, like Chris is suggesting, some overtime pay for the remaining folks that were still in place. Another question is with respect to the PPP and the permissible funds. There is a statement in the permitted uses to suggest that you can use the loan funds for funding of retirement accounts for your employees. Can you use that to fund a SEP or other retirement options and pay more than 75% in salary and still have a debt forgiveness? So if you don't have big rent or utilities, can you fund SEP or fund retirement options either for yourself as the owner or for the staff only, and have that 75% figure allocated to payroll be higher?
I understand that you can. I understand that you can certainly add the benefits to the payroll to make sure that that 75% is met. Again, this is how we're reading and interpreting it now. The pension funding, you got to be careful there because the pension has to be a company-owned pension. So it's not your individual pension that you're funding. So let's say you have a solo 401k, not a solo, but let's say you have a small 401k. You've got a couple of employees and you've got a 401k. The pension amount that's going to be the employer's portion is the match. So if your people choose to put more in their account, that has nothing to do with your payroll. It's how they choose to allocate their payroll funds. So you can pay them a little bit more, and then they can put a little bit more in payroll in their 401k contribution, but the employee's 401k contribution is not an additional pension expense for you. What the employer's pension expense is the match that you're giving them. So it's going to be, let's say you have a 25% match. So if you choose to put up to 25% of that employee's salary as the employer match, that is a true benefit expense that you can also use those PPP funds for. Definitely.
But if you're funding your own individual IRA, for example, for self-employed folks, that's not going to be permitted.
If you're self-employed and you're in Schedule C, for example, funding your personal pension plan is not a permitted use of funds. Again, this is where you are being disadvantaged by being on Schedule C. So for those self-employed folks that they may have a SEP or they may have an IRA or anything like that, but it's not, because they're not an S-Corp, it's not kind of a company plan, if you will, that funding that plan is not going to be considered that permitted use of funds that you can forgive. But as an S-Corp owner, if your S-Corp has that pension plan for you as the employee, and the S-Corp does the match and funds it, then that is considered a good benefits expense.
Okay. Yeah, and that part has been really tough for people, I think, to not only wrap their arms around, but to swallow, because the person who's sole proprietor on Schedule C, that's still a very real business. So please don't take this interpretation as any projection on the necessity or essentialness of your business. This is just the line in the sand that the SBA and Congress have drawn, and it's making it challenging to implement, and it's making it challenging for us to distribute the advice accordingly, because the rules are being written as the game is being played.
Absolutely.
Renee's asking if we're lucky enough to get a PPP loan, but you currently don't have payroll set up, and instead you take distributions. Should you set up a payroll to show these payroll funds rather than just taking a distribution, or is it not worth it for the for the purposes of these funds?
You know, I guess if you have been on that management fee structure, you probably can show that you've paid that management, you continue to pay that management fee amount over the 8-week testing period. It's probably not a bad idea to jump on payroll, but I would hate to say, yes, go ahead and set up payroll, and then now you're incurring the cost of running payroll if all you have is 8-week testing period. In any case, you should have payroll as an S-Corp owner. Exactly. So this may be a good time to get you going. So
that's sort of what I've been telling folks. If you're Schedule C and you don't have any reason to take payroll, I probably wouldn't run and set it up now. But correct. If you're in the S-Corp and this is something that you've been needing to do anyway, consider this the impetus to get set up. Keep in mind too, for the folks that are on S-Corp returns, you're not required to run the payroll with regularity. If I didn't run a payroll here every other Friday, there would be a riot, but you aren't required to do that for yourself. So even if your employees get paid every other Friday and you had regular payroll, you still don't have to take that as an owner. But if you're setting up the payroll as the S-Corp owner and it's just you, you can run that quarterly, you can run that a couple times a year, you can run it when you have a transaction if you're a realtor, for example. This is not meant to force you to an every other Friday schedule. And a lot of times people don't appreciate that or understand that. So even if you set up for payroll during the time of the PPP testing period where you've got the funds, and then you change gears later and say, okay, I'm just going to do quarterly or monthly or something like that, that's totally possible. And this may be actually a good
time
disguise to get you up and operating the way that really is more proper.
Absolutely. If you have a bookkeeper that you're working with, the bookkeepers can all set up and do payroll. If you don't have a bookkeeper and you do your own bookkeeping, we work with ADP And I can get you guys a local rep's name and number. They work really fast. They're very cheap.
Yeah.
ADP and Paychex, these big companies used to be fairly expensive, where people always thought, oh, ADP, that's got to be a multi-employee type of a setup, but that's not the case, because 95% of the businesses are those small S-Corp with 1 or 2 employees, owners, wife, and maybe somebody else. So they have been very, very reasonable with their fees. The guy that we work with locally is fantastic, Nasser, and he's very responsive, so they can get you guys set up pretty quickly.
And even outside of this pandemic, those folks are a resource also on your team. We talk a lot about building your team of professionals around a strong business. You should have a lawyer, you should have an accountant, you should have a financial advisor. That's kind of your 3-legged stool. But having a professional payroll service, they not only are running that payroll for you, but they're helping you file those payroll returns and meet the reporting requirements. Some of them do some light HR for you in terms of helping to onboard and do the proper background searches and documentation that are necessary for employees. So if you're new to business or you're getting ready to hire your first employee, it's a nice benefit that you might not realize is coming with it. So
yeah,
enough sales pitch on that, but it is something that we see, honestly, that makes life easier for our small business owners. But I think that it's important to point out that you're not signing up for an every other Friday commitment forever. You can do it for this period and not have to do that in the future if you on the same schedule. I wouldn't sign up just for the 8 weeks and then turn it off again. You can, but you don't have to. And to Renee's point, I don't know that we've gotten the guidance yet from SBA. We're hoping that it will come to show, how do we evidence that your funds, if you are on Schedule C, went to payroll, went to that owner compensation replacement? Do we show your utility bills? Do we show your personal mortgage payment or rent, grocery bills? We don't know yet what that's going to look like in order to get that $15,000 of debt forgiveness that Marina referenced earlier.
The other thing that I do want to mention here is, if you guys, I know we've talked about how much, in this process, being on Schedule C versus being an S-Corp is a disadvantage because you can use certain things or it's harder to calculate or whatnot. This is just a small part of your overall decision on how you run your business. So Schedule C in the long run may still be the right thing for you. This is, again, not to say that everybody needs to immediately form an S-Corp and go be an S-Corp going forward. In certain situations, in certain folks, we have a bunch of Schedule C people and they continue to be on Schedule C. We look at the pros and cons, the savings in the payroll tax, the ability to contribute to pension plan, a lot of the different factors that we weigh and determine if moving to an S-Corp is appropriate. So here we're only talking about this disaster relief assistance. This should not drive your overall big business decision making on how much payroll to take, how much income to show, because at the end of the day, the efficiency for tax purposes, cash flow purposes, and overall what works with all of the other factors in your life is going to be more of the driving decision of how you run your business than your ability to get 2 months worth of payroll. Because again, folks, if you look at the big picture, if you are a small business owner and you're on Schedule C, it doesn't matter how much money you make, you are capped at 100,000 as the basis. With 100,000, the max loan you can get is 20 grand. So although it seems like a big deal when you are struggling and 20,000 is a lot of money, at the end of the day, being able to run your business efficiently in the long run is going to save you more and be a lot more cost efficient than chasing this 20,000 today. So I think we want to put everything in perspective, because a lot of the questions that I got was, well, why is my salary so low? And because my salary has been so low, because you've told me to take reasonable compensation, now my basis for PPP loan is very low. Am I only getting 5,000 under this PPP loan? Well, yes, you are. But when you take low salary, which meets the test of being a reasonable compensation, your savings in that payroll tax are tremendous. And you've been saving it for the years that you've been on the structure of reasonable compensation, and you will continue to save for years to come. So if you are if you are, let's say, at 100,000 gross revenue and I'm only giving you 30,000 in compensation, and you're saying, oh, at 30,000 compensation, my PPP loan only comes to, you know, $5,000. It doesn't make sense. Correct. But what we've done is by giving you 30,000 on 100,000, we've saved you about 6,000 to 7,000 in self-employed, which is Social Security and Medicare taxes for years. So,
and for years to come.
And for years to come. And those savings are going to way more than outweigh your ability to get this, you know, $3,000 to $5,000 now. So again, have a big picture perspective. These loans have been criticized in the press. I've read a lot of articles over this weekend about how not friendly it is to small business owner. And it is true. It is absolutely true. If you've got a lot of people on payroll, it seems like those companies are getting the loans faster, whether it's because their documentation is clear and or whether it's because they're giving the priority because those companies should keep their doors open versus a small guy that's got under 5 people. I'm not sure how, if it's first come first serve or how it works, but I think that it's your efficiency in how you run your business, tax savings and cash flow savings as that small guy is going to override your ability to survive this more than getting these extra couple of thousand in the PPP loan. So I think keeping that in perspective is a good idea.
Couple things I want to jump on to what you said there too is the other component of the more organized businesses with payroll and employees getting the loans first. That when I spoke to the business bankers that were processing these loans, you know, they said, look, in the beginning, there wasn't even a way to prioritize. It was like a fire hose. So they were just shooting at them. But when they would do their cursory review, those organized businesses that had bookkeeping, that didn't have the shoebox method, were able to submit an application that was ready to go to SBA. So it wasn't so much that the bank said, ooh, let's work with you, as it was, oh, your box is ready to go. So again, preparedness is contributing to speed, and speed is absolutely tied to success when it comes to these loans. That's been clearly demonstrated. The other thing I think you're going to see during this second wave of funding is the banks know better now what the rules are, how they're internally going to process these things. So I do think you may see some leveling of the playing field between the lenders to say, okay, now we know what questions we should be asking. Certainly the applicants are more familiar. Now you've had a month to hear about PPP and to take in and consume information with respect to that, as opposed to when it opened on April 3rd and the program had been announced like a week before then. You hardly had any time, the practitioners hardly had any time to absorb it, let alone the general public. So now, you know, it's an acronym people are familiar with. They don't think you're crazy when you're rattling off PPP and EIDL. People know how to spell them now. It's just a different environment intellectually. So that puts, I think, these folks that are at the second wave of funding actually at an advantage. So I think a lot of people have emailed me and said, you know, lamented, am I just out because I am not already in? No, do not just sit on the side. If you don't apply, you absolutely will get no money. But all I can do is stress, please, please, please apply quickly. The one piece of criticism that I did hear was that the bigger businesses had stronger relationships at the bank, and there was some indication that possibly they were, you know, prioritized because they had a good banking relationship that the bank didn't want to lose. I didn't personally experience that with any of my clients, but that doesn't seem beyond the realm of possibility for sure. As you can see, lots of folks are giving these loans back, larger companies, institutions that are household names. The one this morning that I saw was the Lakers. You know, people are now mad, like, why did they even apply? That doesn't matter. The money's going back, and we do hope that'll be included in additional funds that are available to be reallocated to other small businesses. So what I can say is stay on it, stay vigilant. It is frustrating, but be swift in your application so that you can get the assistance that you are due, because it is unwise to sit on your hands at this point. And I wouldn't say to anybody, don't apply now. Another question I've gotten is, should I switch gears? and that's a really hard question for me to answer. If you are at stage 1 at a huge bank, like you've submitted their stuff, but they haven't approved it, you might want to consider another alternative. If you are awaiting SBA approval at your large institution and the institution has approved everything already, you might want to stay put because you may already be in the queue. So that's kind of a tough call. I would say on a case-by-case basis, to the extent that you can get any information out of your lender. I know those people are absolutely on the rails. It's very difficult to get them by email or phone. But that is something to take into consideration. We've spent the balance of today so far on PPP, and one thing I wanted to do was just spend a few minutes on EIDL. The EIDL program, again, is a loan program. It is not forgivable except for the emergency grant portion, but this is really a program that is geared towards your operating expenses. So this loan you're going to apply directly through SBA for. You aren't required to wait on a bank to open their doors. This program also was granted an additional $60 billion to fund loans to folks who maybe didn't have enough payroll to be eligible under PPP or to get a meaningful loan under PPP. So don't forget about EIDL. It's certainly an option that's out there. And the emergency grant portion has been reduced in terms of its significance because of the head count, which seems to be an arbitrary rule, but we're stuck with it. So that $1,000 per employee on your payroll is what they're using to determine your eligibility for the emergency grant. But you can use that for 6 months of eligible expenses. The expenses that are available that are permitted under EIDL are far greater than those under PPP. So be mindful that may be an option for you, particularly in some of our sales individuals like realtors. You can't use your PPP funds to pay lead generation or marketing fees. You can use that under EIDL. So keep those things in mind. If you have applied for EIDL, despite the fact that there's additional funding, I don't foresee them making any loosening of the $1,000 restriction per person on payroll. They've put an additional $10 billion earmarked for the grant money, but it went so quickly the last time. The only reason they put that restriction in was to slow it down and to just get some money in more people's hands, rather than, I don't think you're going to see that open up back to the $10,000 unless you've got the head count to account for that. Have you heard anything different, Marina?
No, I haven't. And the other thing I was going to ask is one of the criticisms that I was reading in the papers, in the articles last week, was that the small business is not really, they put everybody under the same category under 500 employees. So, yeah. But most of the small business is 10 employees, maybe even under. Look at our clients. How many clients do we have that have more than, 10, 20 employees? Most of our clients are really between that 0 and 10, 15 number. So a lot of the criticism came from whether there's going to be a segregation of funds to give to those real small business versus the rest of the small business. Sure. But I don't believe I've seen anything that's really come out to say that a certain amount is going to be for those businesses versus others. Have you?
That was discussed, that there was going to be an earmarked dollar amount. I didn't end up seeing that in the final bill, but there was still an emphasis that priority would be given to businesses with 25 employees or less.
Mm-hmm. Mm-hmm. Because a lot of those businesses were, I think, because they were self-employed and independent contractors, because their application opened a week later, by the time the guidance came out and the money had run out, and those people had applied as the funds were really running out. So I think they're just trying to make up for and give those people an opportunity to get some funds. We just keep asking our clients to let us know when you get the money so that we know how the process worked, who, in terms of the size of our client, who got the money. I know some of my folks with we have a couple of restaurants, we have a couple of, multi-employer employee kind of businesses that they've gotten their funds already, although again, later, not on the first round. But, one of my clients got funds last week. So it's starting to happen, and we will turn our attention to forgiveness piece of it. I would imagine in the next couple of weeks as we get more guidance. Joanne, do you want to touch briefly on that Sarasota County loan that's out there that people have been asking me on and off a little bit? If you maybe just want to touch on that for a minute.
I will. One thing I want to do is just answer one quick hanger question here on EIDL. Marion's asking, if you got the grant portion, what's the process for the rest of the loan? You apply for the grant when you submit the initial loan application. So you provided your revenue and your cost of goods sold and your operating expenses on the initial application. The I guess plan was through SBA was to do the grant portion first and then come back and review the balance of the application to determine eligibility. I haven't had anybody get to that point. I had spoke with a client yesterday who said, so like, now what? Like, is somebody going to call me? Because he received an email from Chase, and he said, or I'm sorry, from SBA with respect to his EIDL loan. And he was like, this just says you'll be hearing from us, but what does that mean? Are they going to just send me money? Are they, because, you put the routing and account number to your bank on the application. So when it came to the grant money, yes, money just appeared magically in the account. But I haven't personally seen anybody get to round 2, which is okay. You said your operating expenses for 6 months were $25,000, for example. Show me. I haven't had anybody get to that point. What about you, Marina? You said you have one person who got EIDL, or no?
No, I got a few people got those grants,
but
not the real loan. I haven't had anybody who got EIDL actual loan other than the grants yet.
Yeah. All right, so we're rounding out to the top of the hour. I want to be respectful of everybody's time. One thing that has come up was yesterday, Monday, the 27th, Sarasota County did make available a loan for $25,000. It's a loan. It is fully repaid. They do have some business sectors earmarked, so a certain amount went to different types of businesses. And those were outlined. This is through the Sarasota County EDC. So they have their own batch of rules on what you're eligible for. A lot of people have inquired about it. There is some interest. There's only, I think the money shook down with the max loan to like only 160 businesses even eligible. So yes, there's a $25,000 loan, but only 160 businesses are going to get it if everybody gets the max. So I'm reticent to throw that out there as a lifeline for our local Sarasota County businesses. Not to say that it's not worth it, but just like the Department of Economic Opportunity Emergency Bridge Loan, 1,000 businesses got 50,000 and everybody else got nothing. So that money is going to also go quickly. It just opened yesterday, and I think they start funding on May 1st. It is low interest. I think it's no interest for 2 years, and then it's low interest. Pardon my memory. I wasn't, I don't have that interest rate committed to my memory. We do have some information on it. If you are interested in that, I can email you if you want to email me. We do have a white paper that we've put together on that. So
I wanted to mention that since that loan is not coming from SBA, that loan is coming from the county. That is not going to be where it's like an EIDL and PPP where, well, if you get EIDL first, it's going to get refinanced into PPP. These are completely different organizations. So if you get this loan, this is not going to be refinanced into your PPP loan. If the whole point of this loan, I think, was for while you're waiting for these potential PPP funds to come in, is something to, tie you over. However, please keep in mind that if you apply and you get this loan and then you get your PPP loan, you cannot use PPP funds to repay another loan.
Right.
That is not permissible use of PPP funds. So if you're waiting on the PPP funds, in anticipation that you will use them properly for payroll, rent, mortgage interest, and utilities, and you're going to get your PPP loan forgiven. But if you use your PPP loan to repay this loan, which you got waiting for PPP, that is not a forgiven use of funds, which is why you got to be really careful when you're getting some of these other things. Please do not use the PPP funds to repay any of the other things that you've got going on. Where, you know, this loan may not have the requirement that you need to use PPP funds to pay it off, but folks may say, okay, well, this was my sort of a bridge loan to tie me over, which means I can now take PPP funds and pay it off. Don't do that, or else you're going to have one loan and now you're going to have this other loan that you need to pay off. So it's just going to be really funky.
So the total loan amount available was $4.3 million. The interest rate is 3.5%. You don't start paying until May 15th of 2020. So you've basically got 1 year of deferment until a payment is required, and the maturation of that is 4 years. So you're gonna have a 4-year loan at 3.5% interest.
Mm-hmm.
This does actually have a debt forgiveness component. If 80% or more of the loan principal is repaid by June 1st of 2021, the outstanding balance will be converted to a grant. So the people who give the money back quickly are going to not have to pay the whole thing. But the permitted uses for this pretty much mirror the PPP program. So it was payroll, utilities, rent, or mortgage. It did, however, the Sarasota County grant allowed for marketing expenses and insurance to cover business operations that PPP didn't cover. So it is a little bit more flexible. I don't want to poo-poo it by any stretch. And obviously the administration of this is going to be on a much smaller scale than SBA. So you're right, Marina, this may be exactly what somebody needs who is using it in terms of a bridge. What I didn't see was anything in there with respect to the not double dipping. So applying for the same payroll, if you will, or using the money for the same payroll that you have applied under PPP. So because this allows for a broader variety of expenses, but you can get up to 25,000, but you have to be mindful of that. You also have to have 50 employees or less. So there's a calculation for, you know, part-timers and seasonal people and things like that. The other thing I'll mention, sole proprietors, independent contractors, self-employed, and gig workers have to have had a Sarasota County business tax receipt for at least 3 years. Now, if you don't know what a Sarasota County business tax receipt is, that's probably going to be a problem. Here is another, you know, that tax receipt is extremely inexpensive. And this is the first time in the 15 years that I've practiced that, other than avoiding the penalty and cooperating, that I've seen, you know, something like this be tied to that. But obviously, if the county is going to benefit you, you should be properly organized under the county. I'm not sure where the 3-year rule came from, except that you can't run out and get one now to make yourself eligible. So if we've set up your LLC inside Kuntz & Associates, you have that. If we do it as part of the setup, you would be noticed of the renewals on an ongoing basis. So if you aren't sure if you have it or not, that they literally send you a receipt, sort of like the license that you get, that you see at like a salon for a cosmetologist, or, you know, the long skinny licenses. That's really what it looks like. So I guess they email them now too, so you could just print it out on regular computer paper. But that is resiliency loan, as they call it, in a nutshell. We have a few minutes. If anybody has any questions, we certainly can field them. As always, we want to thank you for the folks who do take the time to send us your thoughts, your experiences. Forwarding emails that you're receiving from the banks is incredibly helpful and allows us to continue to help others. I know a lot of people include funny messages, which lightens my day. I had somebody who forwarded a Chase email over the weekend and said, "I'm sure you got this from 20 people, but here it is." It's easier for me to delete it if I did already get it than it is for me to see it if you are the only one who forwarded. So So please don't hesitate. You are not bothering us. You are absolutely helping not only us, but our clients, anybody who attends these webinars, and it allows us to give a broader reach of assistance for everybody. So that being said, I think we've answered the questions that everybody has raised. Again, if you do have questions, you're welcome to submit them to us. All of our webinars are recorded and are made available on our website, kuntzassociates.com and kuntzparkin.com. We have a nice big red COVID-19 banner. You can't miss it even if you tried. So you can access those things. They're also on YouTube and on our Facebook page. If you do have any questions or needs, we're happy to help. And we'll be in touch. We'll see you Thursday morning at 10 a.m. for the balance of whatever information we learned this week. Good luck. Get your Schedule Cs ready if you don't have them already. And you know, may the force be with you on PPP. So,
thank you guys.
Everybody, have a great day.